Good afternoon and welcome to Biztech's Asian Midday Market Watch. Our guest today is Gabriel Yap, Executive Chairman of GCP Global. Now, Gabriel, it's always good to have you on the show.
Hey, Brian.
Now, Gabriel, before we get your insights, I want to take a look at see how crypto markets are performing, and then after that, we look at regional markets. Now, if we look at Bitcoin today, it's at 66,629.5, is down 2.41%. Ethereum is at 4,714.91, it's down 2.26%. Now, looking across regional markets, we've got the Nikkei, which is at 29,126.42. It's down 0.54%. Shanghai Composite is at 3,464.8. It's down 1.2%. The Hang Seng is at 24,520.94. It's down 1.18%. The ASX 200 is at 7,414.20. It's down 0.27%. Kospi is down 1.24% at 2,925.77. Closer to home, the Bursa Malaysia is down 0.41% at 1,517.71. Rounding up the numbers, it's the SGX, which is at 3,225.41. It's down 0.56%. Gabriel, it's a sea of red across the region. Unanimously, what's going on? Tell us.
Nothing really. I mean, essentially, Brian, all these statistics actually do look good, in the run-up towards the end of the year. For example, if you look at the corporate results season, 78% of the companies have reported S&P, and all has, or most of them have beaten forecasts. Revisions of PS has actually gone upwards. I think the EPS outlook for the next quarter has gone up to 55, 53 cents. Valuations are at the top end, but it is not considered overstretched. Interestingly, everybody was worried about the 10-year bond yield. Yes, the 10-year bond yield actually shot up from 1.33% to 1.6%. And guess where it is now? It's gone back to below 1.5%, Brian. So once again, where's the worry?
So, Gabriel, I want to ask you about an interesting corporate development in the US, an old favorite of ours that's now splitting in three, General Electric. Now, they're splitting into three different listed units, essentially healthcare, energy, and aviation. What's your view on this split right now? Is that good for shareholders?
Oh, yes. It's something that we have been telling our student investors in our GCP Global quarterly classes, that if GE actually embarks on this split, essentially it will help to crystallize value in the various segments. Now, previously, GE has been a stalwart. In fact, it's still one of the only 30 component stocks in the Dow when the Dow was first convoluted way back in 1896, Prime.
Wow.
Can you just do that more than 100 years ago? And it's still the only stock that's still around. The fact is that when GE grew from one company into a conglomerate in the 60s, and it went to the nifty 50s in the 60s, everybody was paying a premium. But then for the last 20 years, GE underperformed because no longer people are paying a premium for a conglomerate. Instead, people are actually attaching a group discount. So it actually took, the new CEO that came in 2018 to realize that if you actually strip, the units into these three proposed units, you can actually eventualize and realize each of the values intrinsic in the healthcare business, the engine business, and the aircraft business.
Okay, I want to talk about another proposed M&A, but closer to home. It's the Keppel's proposed acquisition of Singapore Press Holdings. Now, what basically, I think that was Keppel has upped the offer for Singapore Press Holdings by 12% and says its offer is final at $2.35.1. Now, what's your view on this latest development and the sheer quantum of rise in terms of the offer?
Well, this is another issue where we had hit the hammer on the head, because in our GCP Global classes, we have already told many of our student investors that the competing offer from the Ong Beng Seng Consortium is indicative that, one, the underlying assets within SPH after stripping off the media business is actually undervalued. I mean, if you just tally up the amounts that they paid for old age homes plus student lodgings in the last 3.5, 4 years, you notice that the offer price doesn't even come close to valuing a good premium on these two underlying assets. The second point is the fact that if you look at essentially the assets per se, the restructuring, if you're actually going to do or take over the company and then actually do two REITs out of it, that means one is student lodging and two old age homes. I think it's very easy. So thirdly, it also means that the composition in the purchase consideration that's been offered previously by the earlier consortium led by Keppel, is actually using a lot of SPH REIT shares and Keppel REIT shares. Since they are already having these shares within their arsenal, it doesn't really take too much, for them to actually offer more of the ammunition to actually trying to catch this prize and lovely lady that's actually SPH minus of the media assets.
Now, how about then, is the market expecting perhaps then a counter offer from the Ong Beng Seng led consortium?
Well, I wouldn't be surprised. The only thing is that if Ong Beng Seng consortium does come in, they have to offer a price that is higher than what the new offer has just come in, since that the Keppel's consortium have already said that they won't be revising up their price further. So it's left to be seen. But guess what? In a very stoic as well as boring Singapore market for the longest period, now at least we get some excitement towards Christmas. So it's early days, Thanksgiving, and for Christmas.
One more thing I've got to ask you about, Gabriel, is crypto markets. So we've had a sharp rise in crypto markets with Bitcoin and Ethereum and stuff hitting record highs. There's been a slight pullback, but we've just had results from Coinbase that actually are 13% down. The stock price is actually down 13%. Basically, they blamed factors of reduced volatility as a reason for their poor performance. What's your view on this?
It's true, Brian. I think essentially we loved buying into Coinbase when it was first introduced to the market. By the way, it was introduced to the market not through an IPO at the reference price is $250. So in our classes, we actually told people that, hey, it's really something that you should be catching on, because one, Coinbase is a platform. So essentially, it is actually connecting buyers and sellers that and offering custodian accounts to actually store your crypto assets, be it Ethereum, Ether, as well as Bitcoin. So this basically means that they will earn a fee, and they are actually earning fees based on that. But the upside for investors, and especially if you're a trader, is that the constant volatility in cryptocurrencies, as you can see, Bitcoin alone actually in the last 6 months went up to 50,000, dropped day to almost 30,000, and then it just shot up, double the price to 61,000. So this kind of volatility on a month-to-month basis is going to cause huge inflows, huge outflows, and based on that, the percentages that they make on the transaction fee, that's basically for Coinbase, will be affected. So 13% fall for a share price based on a month-to-month differences is not something that's worrying. But more importantly is that Coinbase, if it proves itself to be one of the best crypto platform, that is really something that we like, that will continue to like. So when we actually bought it at $250, we're still keeping the stock because we think that for new things like crypto, Bitcoin, currencies, in this aspect, we like to own the companies that make the shovels, and Coinbase is certainly one of them. So I do hope that this volatility bring it down further so I can accumulate more into my portfolio.
So you're a picks and shovels guy. Gabriel, thank you very much for your insights.
Thanks, buddy.
Now, we've been speaking to Gabriel Yap, Executive Chairman of GCP Global, on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out this video and podcast on our various social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.